Whether it's learning about earnings estimates, exploring the Zacks Rank, or adding to your financial toolkit, get the education and resources to help you become a more successful investor here on Investing the Zacks Way. You know, recently Steve Reitmeister, our editor-at-large on Zacks.com, cleared up some confusion for us on the difference between the Zacks Rank and the Zacks Recommendation. Well, now there is yet another confusion for him to clarify for us, so he's here with us once again to do just that. And this time around, it's a little confusion between the Zacks Rank and broker recommendations. Do your magic, shine some light for us.
Okay. Yeah, there is some confusion on that because both are forms of recommendations, the stocks to buy and stocks to hold and sell. But there is great difference in how they are created and the benefit for investors. So we're going to kind of break it down into its parts today and then reassemble it back together so it all makes some sense. So the parts include what's the difference between broker recommendations and brokerage, or what we sometimes call analyst earnings estimates. So we're going to take a look at those two. Then how the brokerage recommendations kind of get put together in a consensus type format in what we call the average broker recommendation. And then how we take earnings estimates, the analyst estimates, and we put that together in the Zacks Rank. And so now that we've done all this dissecting to its parts, we put them back together and say, okay, what's the real difference for investors and the usage of them to pick better stocks? And I'll just give you a quick preview of that because I think it's important as we go through these pieces. Broker recommendations as a whole are not really that valuable. And earnings estimates is the most powerful force impacting stock prices, and
we say that all the time.
And I'll keep repeating it until the day I die, and so therefore, through the Zacks Rank, Len Zacks, mathematician, he proved it through his work and 30% annualized return going back to 1988. So here again, I'm going to explain all the parts, but do keep in mind that earnings estimates is where the money's at, and brokerage recommendations. It's interesting, I'll explain it, but then please quickly discard it from your usage as an investor.
All right, then let's start with the first part. What is the difference between broker recommendations and analyst estimates?
Right. Both are emanating from the same spot. It is an analyst at a brokerage firm who is analyzing companies. So here again, just a little bit of a backdrop. There's approximately 150 brokerage firms in the United States and Canada, and inside those firms they have research departments where they employ about 3,000 what we call equity analysts or stock analysts, whose job is to concentrate on industries and the companies in those industries and do an analysis of those firms from the top down and try and really understand the health and well-being of those firms, and therefore what companies might make the most attractive stocks to buy. So the things that the analyst community provides that we, the investors, really pay attention to are two main components. One is the brokerage recommendation. Do they recommend that we buy, sell, or hold these securities? Okay, so that's the most important. So that's the thing that most people are used to coming out of there. But also, what we find very valuable is the earnings estimates that they create. So in other words, they create projections of future earnings for these firms, usually going out 2 years, but some analysts will even go out 5 years, making these earnings estimates. And as we've talked about here before, the power of the earnings estimates is that investors put them into their fair valuation models, which tells them how much they should be paying for a stock. So earnings estimates up, fair value up, and interest in the company goes up. So those are the two main components, the brokerage recommendation and the estimate of earnings.
All right, you mentioned that the brokerage recommendations get rolled up together into a concept called the average broker recommendation. Tell us about that a little bit.
Yeah, here again, this is one of the most commonly used, and I often say abused, statistics in all of investing. It's on virtually every investment website. And it's a very simple concept, but people imply in it far too much value than it deserves. So we're gonna go over it very quickly, and as I said before, then we're going to discard it very quickly. So the analysts who follow a stock are going to give it a recommendation between strong buy and strong sell. And so what I'm going to do is going to put up a little chart here that explains how we score what each of those recommendations mean, and then how that's put together for the average broker recommendation. So every time that a broker gives it a strong buy recommendation, we're going to give that a score of 1. Okay, and then a buy 2 and on down the list. Now you have all these separate parts. So let's just take example IBM, which today has 14 analysts that are following the firm. And a certain number of them have a strong buy rating, a certain number have a buy rating and hold rating and so on. And you add up the points from the scoring system, you divide it by 14, the number of analysts who are following the firm, and what you come up with today is an average broker recommendation of 1.61. Now, here again, the mistake that investors make, they say 1.61. Well, that's in between strong buy of 1 and a buy of 2, so that's very positive. That sounds like a great stock to be in.
Would sound like it to me.
Right, but it's not. Okay, and why is it not? Because Len Zacks, the mathematician, he spent his time. He looked at the information and he found that there was no correlation between the current average broker recommendation and the future performance of stocks. And really, the greatest condemnation of the brokerage community is that when the market is going down, okay, that sell ratings actually outperform the buy ratings. And that's one of the things that's truly sad. So to be clear, I'm not saying that all analysts are poor. I'm saying there's actually some very excellent analysts out there in picking stocks. But as a community, as a whole, they haven't shown much value. And since the average broker recommendation is about the entirety of the analyst community, it's a pretty watered down thing, and you're going to do no better using that than you would be just buying the S&P 500 average.
All right, so now you know, throw the information away.
Throw it away.
So now tell us about how analyst estimates get rolled up into the Zacks Rank.
Right. You know, we've covered this up, down, and sideways in all of the pieces we do about the Zacks Rank. So here in the quick overview. So Len Zacks, PhD in mathematics, job is to find strategies that outperform the market. He created this theory that if you could figure out what stock's more likely to have an earnings surprise in the future, and you knew that ahead of time, great advantage. So he found 4 factors that were very indicative of future earnings surprises and where stocks would move. And 3 of those measures, agreement, magnitude, and upside, are all measures of earnings estimates that are created by the analyst community. And the last factor is surprise, which is companies that surprised in the past more likely to surprise in the future. So here again, I'm giving you the quickie overview because we've gone into this in depth. There's other videos that you guys can watch
in the archives.
In the archives that you can watch that explain the 4 factors. But you know, the analyst estimates, we use them for the 4 factors of the Zacks Rank, and you know, its output, the Zacks Rank, try and tell folks the best stocks to be in and the worst stocks to be in. And here again, we go over the performance far too often, but yeah, it's pretty darn good.
Okay. Power of mathematics.
Yeah.
It's a powerful tool. You've given us all the pieces of the puzzle up to this point. So now we need to put the puzzle together. Right. And that's what we turn to you for once again. What is actually the benefit of using one versus the other, the Zacks Rank versus the broker recommendation?
Yeah. The one thing they have in common, which is what causes the greatest confusion, is that both the brokerage recommendation and the Zacks Rank are on a scale in between 1 and 5, with 1 being the highest rating and 5 being the lowest. And that's where, and that's the last part that they have in common. I mean, I've obviously already tipped my hand here. I've already kind of given away what I think about brokerage recommendations, or in particular the average broker recommendation. It's just not valuable to investors. It will give you no advantage over the market, and yet earnings estimates, which we have proven, you know, for over 30 years here, as being the most powerful force impacting stock prices. That is the best thing that comes out of the brokerage research departments and what these analysts are doing. That is what's indicative of future stock price movements. So yes, clearly concentrate on earnings estimates and the analyst estimates, you know, the synonymous terms, which then rolls into the Zacks Rank. And please, please, please avoid the average broker recommendation, because it's just not worth your time.
All right, there it is, the difference between broker recommendations and the Zacks Rank, and the benefit of using one versus the other. With Steve Reitmeister, I'm Terry Ruffalo.